Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, how do I identify good day trading stocks? And answer by Shravani Naidu. According to me, identifying a good stock that which contains good fundamental is pretty huge task, but must be ready to do any task for better returns. If a proper planning is made, then you can get expected or more than expected returns from your investments. Select a company with good track record. This is the most crucial part in any investment. So various factors come into picture while selecting a company, such as bonus share, capital size, dividends, business governance, historic stock chart. It would be easy to analyze the company performance even from past 5 years. So to invest in company, there would be a particular time which is completely dependent on seasons, like Whirlpool, Dec to February, would yield good returns. Kaveri Seeds or agro-based companies, seeds, fertilizers, would yield good returns before Kharif, rainy season, and Rabi, Jan to February end. As an investor, one should look at liquidity of stock such that it must be easily liquidated, and must look at reserves, because the company with large amount of cash reserve offers a high amount of dividend, tax-free, in year ends. It is a great choice for your plan of investing in stock. Capital expenditure. A good capital management must be there in a company so it can be visible in annual report of the company. As when expenses are controlled and operations are taken place, then there would be a better returns. So, when an investor is investing money in a company, he must be assured, where it may be mutual fund, direct, X, Glenmark, Dr. Reddy. When industry have very less average of returns, at the time of GST implication, demonetization, they performed well. Small cap and large cap portfolio. You can increase your portfolio return without increasing the too much of risk. Your investment can possibly increase by investing in companies that have highest possibility of getting good returns. By making a portfolio with a combination of small and large cap stocks, this can help you in terms of investing in risk in stocks. Engaging the stock market can be a great challenge for anyone. You need to spend some time before you can possibly find the best market to invest, so make the most of it to come up with the best results. Do not rush things, take each step slowly but surely. Answer by Yash Mehta. Hello sir. There are almost 5,000 stocks listed on MSE and around 7,000 stocks listed on BSE. So it would be really difficult to analyze all the stock and pick the best one. So I will share my way of finding stocks to invest for both long-term and short-term. There would be a case that some stock which I had selected might be lost or would show no movement. Steps for screener. Initially I use small case screener, where I can give my input of some ratios and I would be getting a list of some sorted list of stocks. Link, stock screener, by small case, and the input which I give are as follows. PE ratio, 120. Debt to equity ratio, 0.1. Market cap, there is option for small cap, mid cap and large cap. I just click on that depending on the risk which I can take. Usually large cap is less riskier than mid cap, which in turn is less riskier than small cap. PB ratio, 0.2. In some cases I avoid this. All this will give me a list of stocks. Fundamental analysis. From the above short-listed stocks, one needs a little bit of number crunching. Check the PE of company and industry. Check the EPS of the stock and check the EPS of last 5 years. Calculate the fair value of stock by using the formula, fair value equals PE/EPS. If the stock price greater than fair value, then the stock is overvalued, else it is undervalued. Then you can see the revenue of past 5 years, it should increase continuously. Net sales from operation. Check the debt, it should decrease year on year. All this data you can get from Money Control or from the company website. Technical analysis. Analyzing charts to determine entry price and stop loss. Also, because of various factors, we can see some sectors which can perform well and can give good returns. For me, the good sectors which I would see some opportunities would be cement, infra, beverages, insurance. Note, above mentioned things are for educational purpose. Also, there would be other methods to identify good stocks. These sectorial views are my personal view, so before investing in any of the above sector, please consult your financial advisor. For more information or any financial/stock queries, you can visit my Facebook page, The Shareholder, so please do like and follow the page to get more information. Also, if you want more information on above thing, you can contact me on details below, and you can join my WhatsApp broadcast group. Thank you. Yash Mehta. WhatsApp/mobile, 90298903664. Mail, ymeta50@gmail.com. Facebook page, The Shareholder. Answer by Prateek Kumar. Greetings. An analyst can handle a checklist of points that can help you select a fundamentally strong investment. Checklists such as a firm possessing a decent book value, low on debt, high product sales, lower tax liability, positive cash flow, considerable revenue coming out of operation, high shares capital, international operations, strong exports number, a firm with a reliable supply base of raw materials, sound R&D facility and capex, and the list goes on. In order to meet the norms given above, you need to indulge yourself into advanced scrutiny of basically 3 of the important papers released by the firm on a quarterly or sequential basis, which are namely balance sheets, cash flow statement, profit/loss statement. It's better to decide before commencing the mentioned exercises that which will be the sector you're gonna encircle for analysis. This will reduce the 5,000 number to a little less depending upon the category and the players involved. Still, there are lots of factors which have to be taken care of before you put your money on the table. Among those factors, some can be predicted correctly, whereas some will be beyond imagination. So, my advice will be to read more upon the subject, because handling a portfolio on self first needs lots of courage, because you have to assume at the initial stages only that the turn you're gonna take can also be a blind one, and second, you need to sod a lot of education to avoid accident cause a blind turn you driving into out of discretion.